Hi, ladies and gentlemen. Welcome to the Expat Chapter, the Bloody Franks podcast, where we seek to answer the questions you didn't even know you needed to ask. Last week, we discussed Brussels 4 and the French government's recent ratification that British nationals are now able to readopt the testimony laws of the UK. So, this subject raised lots of succession and inheritance tax questions from the podcast listeners, which I think we need to address this morning. So let's start with James this morning. Can you explain what happened to pensions or what will happen to pensions and inheritance from next year? It's quite groundbreaking news.
Yeah, it's huge. So from the 6th of April 2027, UK, all pensions will be liable to UK inheritance tax. So a huge decision there, or change, because we've been prompted and persuaded to put money into pensions with tax reliefs on the way in and various different other incentives to fund and properly finance our own retirements. We're ever increasing longevity, and we need more money in our pensions to kind of support retirement. And now this is a huge attack on that kind of savings pot that we've all been saving into for such a long time. I mean, the tax calculations, inheritance tax calculations we're coming across at the moment, now that we're starting to take pensions into consideration, is eye-watering, in all honesty. The increase in inheritance tax is going to be generated from this change is huge. And luckily, living in France, as we all are, there are different opportunities that you wouldn't have in the UK to get your money outside the UK rules and outside the inheritance tax net.
One of the things, James, that I come across quite frequently is people also forget that after the age 75, it's not just inheritance tax.
Yeah, so that's a good point. So after 75, you'll also be liable, or your beneficiaries will also be liable to income tax. So income tax rates up to 45%, inheritance tax at 40%. A good chunk of the pension pot literally disappears by the effects of this UK inheritance tax rules. So that's a combination of inheritance tax being liable on the pension pot, and we've always had the rule where if you're over 75, the distributions from the pension for the beneficiary are taxed at income tax rates. So the combination of the two is quite a huge whack in inheritance tax and income tax. But that's where the UK is going with it. The UK is trying to drive taxation and increase taxation wherever they can, and this seems to be easy pickings right now.
Tom, does this change extend to all pensions?
It extends to all defined contribution pensions. So it doesn't apply to defined benefit pensions. So if you've got a pension that has a fixed monthly amount for the rest of your life, or maybe an indexed monthly amount for the rest of your life that is guaranteed, then it doesn't apply to that type of pension. It applies to defined contribution, by which we mean a pension fund that has a value. You get a statement every year maybe, and it fluctuates in value. And that's what we're saying. So as James said, from next year, we're going to see those types of pensions assessed for 40% inheritance tax. And as James also said already, if you die after the age of 75 and you've got one of these pensions, your beneficiaries are going to pay up to 45% succession tax. And to compound the misery, UK pensions, if you're a French resident, they're also potentially assessed for French succession tax, which can be up to 60% in certain situations. So, as we often say, it's really important to take advice on these type of situations.
Absolutely, yeah. James, are they talking more broadly about succession and inheritance, not specifically pensions? Are there common mistakes that you frequently come across?
Yeah, I mean, just not planning. Not planning. We're all going to pass away at some point, so to not plan from it is crazy, really. But yeah, I mean, for pensions in particular, as a French resident, there's so much more you can do. It's a bit of a voluntary tax, that one, when it comes in next year, because you can, if you're a French resident, encash it. And there are beneficial rules for doing such a thing in France. And then you can use different structures to protect from UK and French succession tax. So just to kind of stick your head in the sand and leave it is not a good option. But that's to be said for everything when it comes to financial planning. You need to be taking advice. You need to be looking at what you can do on a proactive basis and not just reactive, or even worse, leaving it until you've passed away and let your kids deal with it, or whoever's left to pick up the pieces.
Getting married in France, Tom, is slightly different to the UK. If somebody is married, Can that have an impact on succession?
Yeah, absolutely, it can. I mean, clients often give me these incredulous looks when I say to them that we actually provide advice on marriage counselling, marriage guidance. It's not actually marriage guidance, but in terms of how your marriage contract is written, that has a big effect when it comes to inheritance or succession in France. So there are different types of marriage regime, whereas in the UK we just have one type of marriage regime that we're familiar with. In France, you have the communauté universelle, which is the community marriage regime. You also have séparation de biens, and those will determine how your assets are distributed. So somebody, for example, with séparation de biens, if you're a couple, then you each have your own distinct share of the assets. Even if you've got jointly owned assets, 50% of each asset will be deemed to be owned by each person. Whereas if you've got the community marriage regime, the communauté universelle, that means that everything is owned communally. And in that latter type of situation, when one person dies, it means that the last survivor generally inherits. Again, it's an area where people need to take advice because the communauté universelle marriage regime can't be implemented in every situation. It may not be suitable in every situation, but it's an area that we encourage people to look at nevertheless.
James, lots of people live together without being married. Is that a problem in France?
Unfortunately, yes, it's a big problem and one we've seen recently with one of our clients. So living together, unfortunately, he passed away. And with the French succession rules that we discussed in the previous episode and the forced heirship rules, because they weren't married, they were just cohabiting, and he had a brother and sister. The money went predominantly to the brother and sister and not to the spouse who were living together. So you're wide open there as a couple to be left or high and dry effectively for the surviving spouse. So I definitely recommend looking into that and seeing what can be done to kind of stop that happening. I mean, this particular lady, poor lady, was living in his house together. And now she's going to be made homeless because she's not the one inheriting the property. So unless she's got enough money to buy her own place, she's literally going to be kicked out. And that's the kind of horrible way that the French forced heirship rules work. But also the fact that planning should be put in place as soon as possible because we don't know how much time we've got left, and it needs to be done before the fact. So unfortunately, yes, living together and not being married can have impacts, mainly if you've not done any planning. You don't necessarily have to get married, but planning has to be put in place of how you want your assets to be distributed and at what time. And the family situation will also impact that situation. With France having 60% succession tax for non-bloodline. So if there's things like people like stepchildren involved, that can complicate matters further. So yeah, it can have a big impact, Rob.
I mean, Tom, one of those things that happens frequently is if you're thinking of writing a will or you're thinking of your inheritance or succession, you've got to think about dying. So not a subject that any of us really want to think about, but is there a big reason why we should do it sooner rather than later?
It's not a nice thing to think about, is it? But it happens to us all sooner or later, and we encounter some people who just genuinely are not that concerned about succession or inheritance. Maybe if somebody doesn't have children, they're going to leave their money to charity. It's not a huge priority for them. But then again, it's quite galling if you've worked hard for your money over the years to know that perhaps you might be paying 60% of that away to the French government when you die, particularly if you nominate the wrong kind of charity, a charity that doesn't qualify. I think certainly for people with kids who want to make sure that the assets pass into the right hands at the right time, it's really important to look at inheritance planning. As James has alluded to earlier, it's a bit of a minefield. The inheritance rules, even recently, have changed, and they're changing all of the time. So it's the kind of thing that clients really, and prospective clients of Blevins Franks, really ought to keep on top of, and that's where we come in, and that's very much part of what we do.
As we discussed last week, James, Brussels 4 has now been re-ratified, but really that's going to impact the French forced heirship rules. Are there ways that we can get around that?
Yeah, there's numerous ways you can get around the French forced heirship rules. So using Brussels 4, the succession laws of your home country being one, you've then got to bear in mind what Tom said last week, which was that if you elect to use UK law, you could have your estate liable to UK inheritance tax, which could annul all the planning opportunities that you have available to you living in France. There are things you can do, but it's not just looking at the will and how you structure things. You can have different assets. For example, I'm sure if anyone's been in France for more than 10 minutes have heard of Assurance Vie. I think 76% of the French adult population now has an Assurance Vie because they're so good for succession planning, not only from a tax perspective, but also from the flexibility and structuring. So you can leave the money to whoever you like. You can get around those forced heirship rules. You don't need to include it in a will. And it's as simple as signing a beneficiary nomination form. So you can change one person in or one person out, change the kind of percentage allocation that goes to each beneficiary very quickly and easily. So there's numerous ways that you can do it. So a bit of a crude saying, but there's what's the saying? There's more than one way to skin a cat.
Rather than skinning cats, I'm not sure what we want to skin now. But this morning we've focused really on succession law, but we've made reference to lots of tax rates. Tom, can you just sort of give us an overview of succession tax in France and how it works?
Yeah, I mean it's complex, but because I've dropped it into the conversation a couple of times that we have succession tax rates of up to 60% in France. I mean, that's the worst case scenario in terms of the French tax. What I probably should say is that there's a misconception that people will move to France and they will pay more in succession tax than they would do if they stayed in the UK. That's not necessarily the case. If you organise your situation in the right way, the French system can be very favourable. But it's just different to the UK system, which many people will be familiar with, whereby you have a nil rate band, a tax-free allowance, and then a flat 40% rate. The French system is different from that because it's a staggered rate of tax. It starts out as low as 5%. For people in the direct line, and then goes up to eventually 45%. But there are, as James alluded to, there are ways such as Assurance Vie that you can really make sure that you're maximising the tax-free amounts that can go to the next of kin. And so that this is where we find that often France is more favourable than the UK.
All right, thanks, Tom. A complicated subject and one that people really do need to take advice about. So, ladies and gentlemen, thank you for joining us for the Expat Chapter. This was number 3. Wherever you get your podcast from, like and subscribe to future ones if you want to join us. And of course, anyone can get any information they need or learn more about Blevins Franks from our website, which is www.blevinsfranks.com. So, next week, join us again. We're going to be discussing the subject of property, how you buy it, how you own it, and what are the downsides to it. Thanks very much.
Goodbye.
Goodbye.